Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for Monday. And we're at the 7th of October, 2024, the anniversary today, obviously, of the invasion of Israel, where 1,200 people were slaughtered. I think that's the right word. Then the hostages taken and what's going on. As you know by now, you're seeing today, for example, the Houthis, the Hezbollah, the Hamas, they're all firing missiles at Israel again. Over 130 were fired so far today. There could be up to 200 by this hour. Who the heck knows? And Israel has not struck back yet at Iran. I don't think they're doing that out of the goodness of their heart. I think they're trying to figure out, both politically and militarily, what's the right course for them. I want to make that word, for them to do. They're not going to be worried about the U.S. pressuring or not pressuring or other countries. They're going to do what's right in their mind for them. Then we're dealing with, in the markets, as you know, a complete flip. And when you think about it, it's a complete 180-degree flip. We have been worried for 2 months when the Fed told us that they were turning their attention to labor because they were fearful that the labor market was weakening. Since that statement, all that has happened, if you really go look at the reports, is there's been not weakening, there's been gradual tightening. And all of a sudden, we've been getting data that the JOLTS number, there's more jobs for offer. That's a sign that people need workers. ADP number took off. We saw Challenger Gray, less corporate cuts. And then the granddaddy, the U.S. jobs report on Friday comes out. And the highest estimate that I had seen was 220,000, 70 about the lowest, with about 143 to 150 as the average guess. That's where the bell all came together. 250 some odd thousand jobs, and the unemployment rate fallen to 4.1%. Through all kinds of spread strategies and everything out the window. And that's what you were still dealing with today. Remember, the event happened Monday morning. There's always follow through as people hold on. Well, it's just a one-day event. Oh, it isn't. What do I do and how do I go with it? Let me pray you for the next event that's happening now. And it starts this Friday. We're in the earnings season. So as you get to the earnings season now, the question is, okay, few expect that October is going to be great. We expected September to be weak, and it wasn't. But you normally get into the first part of October, and that is often a weak part. Now, what throws this whole thing off a bit is we have an election year. So the market is going to be wondering who's going to win come November 5th. Do we actually have a winner? Will it be contested and thrown into disarray? What does a Harris win do versus a Trump win? And what happens is the Fed is looking at these numbers and trying to not be so-called political and saying, what's with these jobs that got strong on us? We just announced that we're worried about that, and this is the strongest sector we've seen just recently. All right, you're not hearing any words on inflation. Am I wrong? Tell me the reports that are showing inflation is going up. You haven't seen that yet. It could happen. I mean, energy prices are exploding, right? The Fed, though, doesn't look at the everyday price of it because it's too volatile. I get it. It's also going up in energy, not because there's demand, because of fear that the supply chain is going to get hurt if Israel decides to go after Iran's oil. That's the reality of the situation. We don't know what Israel's going to do, and they're biding their time, again, for a time of their moment, nobody else's. So what I think's going to happen is this market's going to say, listen, the reality of the situation is that, yes, we got a blip in the jobs, but the Fed is thinking the economy is going to ease some more. The Fed thinks inflation is coming down, and that means to get to a nominal interest rates are still too high. Yes, they got back over 4% in the 10-year today. Yes, the 2 years shot up again too, but the market's probably going to think this is temporary. The market is going to say the Fed has the markets back, and what will carry the day is going to be companies making money. Because with all these people at work, they have money to spend. Duh, it's the easiest thing that I can imagine. They're going to have money to spend. We're not worried about a consumer at this point that doesn't have a job. We're not worried about inflation running away where he's got less dollars at this point. And we're looking at a Fed that's ready to cut more to get ahead of the curve and put the economy on firm standing, and it doesn't want to be too tight to choke off all the good that they've created. Did they get wrong for the moment? The weakness in jobs? 100%. Nobody's saying it. I am. Look at what's happened. Go back to the time that the Fed chair said they've now turned their focus to jobs. Well, what did they do? Want to goose them up? So you see what I'm getting? So I think you start looking a little different, and you start understanding that there's going to be a backlash in AI to a degree. We've seen this over and over when new things hit the market. At first, everybody wants it. And then everybody says, okay, I've spent all this money. How do I make money on it? Investors have a timeline of 30 seconds. You spend the money, I want to see a return. Now, I'm obviously being facetious, about 30 seconds, but it is a short time. And they're going, you're spending all these billions and you're not producing. Think of what happened in Meta when all the money was spent on changing the name to Meta. Think about this, where he took it and then the market went to the toilet. He had to be able to change his business model, I'm talking Zuckerberg, and get things to the point where the company was really humming along and making money. Is it making money on Meta? That can be argued. You can argue, because I advertise there. I use their AI to figure out what's going and not going. I don't know if it's helping me or not helping me, but their revenues are growing. So this is going to go through the whole industry in some manner. You can't spend these billions upon billions and try to explain this is on the come forever. People want to see a return, so those stocks will be punished. How much? Well, depends on the company. NVIDIA's $129 today it hit. 130.64. What's it, $3 from its all-time high or so? Okay, so, but this is the big seller of the chip, all right? But you look at Amazon, a big user, developer, buyer of these chips, maybe their own chips too, going down. I'm watching Netflix today get degraded by a number of companies saying it's priced to perfection. And because of that, not the place to be. That's what put this down today. Boeing, talking again to the union. So you shot up probably a little too much here to 158.90, you know, just to get 158.76, off the idea that at least they're talking. And the reason they're talking is very realistic. Boeing doesn't really want to go out and have to borrow money, and it needs to sell airplanes right away. And the union workers want their health insurance back, and they don't have it right now, and they'd really like to get a paycheck. And they're having to rely on other sources for this. That's all coming to roost, and that's what makes things happen. People start talking again. So this is what you want to see. You want to see it happen with the longshoremen strike. That's a good thing what the unions did. I just hope everybody's talking. If they don't talk, you don't solve the problem, and you can't do it in the last 24 hours. Got to work it out now. In the metal markets, okay, because the dollar went up and interest rates went up, you put pressure on it. Now, tomorrow morning, supposedly, China's going to give us another stimulus. They're going to tell us what they're doing to get consumer confidence back in different ways. Is it going to be infrastructure? What are they going to do? Something there is brewing too. So I'm looking at Crane shares. I brought this up to you for the weekend. And this is a market that literally has gone up, if you think about it, 50% now in no time at all. And this is all based on the come. I want to make this so darn clear that what China's doing with its stimulus is going to work. Is it going to be overvalued here? I don't know. Where'd you put a stop if you buy this? I don't know. But here's what I do know. Today you had an outside day to the upside. Outside days are either continuation patterns or a pattern that sets up a failure. Do you understand what I just said? So taking out today's low over the next 48 hours could be a very problematic number for the market, and you haven't had that pattern on the way up on this blowout until today. So I have my course at the end of this. I'll talk about this, exactly something you should be looking at. You have higher lows, higher highs on the swing line. The market's got a complete crossover now where the 18-day average is over the 100. The 100 is over the 200. And ever since this began taking place, and I'll just walk you right there, this gives you an idea. So here's the market already taking off, and you'll go, well, it can't keep going. It's too far. But if you cross the 18 over that, you generally make new highs. Kaboom. And that's because the late days, moving averages are always behind the curve. They don't tell you where prices are going. They tell you what momentum has done, past tense. They're a lagging indicator at all times. And the market is now taking you up there. Where's the Bollinger Band? Well, it's here. You can get up to it again. You were over it for a long period. I told you you'd drift sideways, but I am giving you fair warning here. Look at today's low. Keep it, circle it on your chart. You have the embedded reading. The market is still bullish until the red line closes back underneath 79. And if it does, generally, price and the 18-week average, but 18-day average in this case, because it's the closest to the market, try to make a run at each other. When you have this type of run, who knows if that'll work or not, but that's what they try to do. In Rivian, so as you know, Rivian's got a shortfall. Lucid, I don't know if you saw what happened in Lucid today. It's the same thing. They're producing less cars, but they got more revenue. In this case, in Rivian, their production's run out. They have a supply chain issue, and the market's got an embedded reading. Again, the trend down, embedded, first good rally probably gets sold in the market. In CrowdStrike, I thought we would fail at right up here at the combination of the 200, the 100, and the Bollinger Band. You hit 2 out of the 3, and then you pulled back to the 18-day average. I don't look for a big break in this anymore. This could be one of those winner stocks that we start seeing the earnings are doing really well. Uranium, as long as you have the embedded reading, you're fine. But generally speaking, the first run over the 200, the 100, and the 18-day average gets tested. Be a little cautious here is all I can say. Win casinos, well, this is just like playing China. This is all about Macau's going to come back. People are going to feel good. Everything's going to happen to the right side and the market taking off. Toll Brothers, well, if you're taking up interest rates, which you've done, that weighs even on the best of the companies. And down you go into the Bollinger Band area. Okay, so you hit today 146.50. The Bollinger Band was 146.64, and you came back off of that, and you finished today at 150.49. That's where the short covering, in my opinion, took place. And I think you're now going to drift around here for a little bit. XHB, this is the home builder ETF. Maybe you can get down to 117.91 and play a game there. You're too narrow in these Bollinger Bands to have the courage to have a big short conviction, in my opinion. In XLF, well, this gets to be the interesting part. What are interest rates going to do, and how is it going to affect financial services? What the market is saying is when rates were falling, do you remember that, they came down. When rates went up, these markets did a little better. Maybe that's what the market needs right here. In the industrial sector, okay, the market is still embedded. The market has to, if it's going to be good now, clear 135.92 and make its run here, because if it comes off a little bit more, probably going to lose the embedded reading and go back to 133.63 to regroup itself. Energy sector, tell me what's going to happen in Iran and Israel, and then you have a better idea. But I have to think, because it's run up so dramatic, everything to do with the energy, that it's getting ahead of itself, and it's already discounting probably one of the worst case scenarios, which be they hit some of the oil, take some off the market, but that oil can come back. Depends kind of infrastructure damage they want to do, all right? You're not going to take the oil out of the ground, you know that. But you can certainly hurt the storage facilities, the pumping ability. There's many things you can temporarily do. And of course, the big thing out there is how do you take out the nuclear facilities so that Israel buys itself time? Because a world with an Iranian weapon is going to be a whole different ballgame. You know, Israel's widely expected, you never hear about it, of course, that they have hundreds of nuclear weapons. They never threaten to use them. That will change when Iran has its weapon. Count on it just like I'm talking to you. That is going to change. And we could be looking at something very different because you're looking at eradication. That is the goal of Iran to Israel. Israel's not trying to eradicate Iran. Israel's not trying to eradicate Gaza or the others from its perspective. Not my perspective, from its. Because the goal of Hamas, Hezbollah, Houthis is to destroy Israel and the Jewish people and get them off the land. You don't have to agree, but it's reality. All right, so we look right here, and will this market get back to 242? We get over to the silver market. You got to be a little bit careful right here. The market wants to correct. I can see the argument to the 2850 area, but I also think that we'll be looking before the end of the year that we're going to be taking out these highs. That's what I do believe, and that's because I believe that lower interest rates are coming in Europe. Lower interest rates are coming in the United States. China has joined the parade in order to stimulate its economy, and with that, there will be a universe where there's demand for goods, demand for industry to get things back. I do believe that. In the copper market, this is all on the come. This is sort of just like the energy market. What China does now, tomorrow, could be the make or break it time for the copper. Don't have an idea there. BND, TLT, getting smashed. Traders didn't count on the market getting that jobs number. They didn't count on the Fed not going 50 basis points. No matter what, remember the naysayers, no matter what you say, we're going to get a rate cut. Well, eventually they had to be right. They were saying it for a year and a half. Well, the people with 50 basis points for November, they're not going to win that. You would have to have the CPI, PPI, PCE, and the next jobs report show a massive revision. So the inflation would have to be high on PPI, CPI, or low. Low on all those, all right? That's what you got to count on. And you got to count that the jobs are way overstated and the Fed's got to go back and rescue the market because inflation's falling. They don't have to worry. They have to cut rates. We're not seeing that. That scenario fell to the wayside on Friday. I don't know what the new one is, but I think I do. I think it's going to be earnings. I think that it's the Fed backing of the market and earnings that's going to carry the next wave. So you look at that, you see where that's going. And I look at the dollar index. Well, you're over the upper band. Let the next guy own it. The odds of it staying there are 5% of the time and falling. Each day consecutive over it takes away some of that verve over it. You're not 5%, you're not 4%, you're not 3%. You're getting to a low percentage that it'll stay over. Doesn't mean it has to break. It's going to move to the right-hand side. And if it breaks, it would make sense. This is your first move over the 100-day average. You generally test that after a while. And in FXE, this should be the area where the market tries to find its footing, between 101.25 and 194. Plus, I think you're going to see the European Central Bank cut rates to spur the economy on because Germany, France, there's a number of countries, their economic engines are hurting. They need to get the cost structures down. One of the ways is that way. So you put it all together, you come up with a game plan, and that's my job to talk to you about it. Now, one of the things that I want you to do is take a look at my course. You don't have to buy it. Take a look at it, all right? The Outside Days course. These are the kind of markets where it takes on super importance, in my opinion, because it's a signal, is the trend going to continue or the odds are it's going to fail? And I teach you what to look for in the continuation pattern or the failure pattern. We'll look at outside days down. We'll look at outside days up. We'll look at inside days. We're going to do this in the futures, the stocks, and the ETF markets. All of them, examples given. And then you're going to get the same charting software I use here that I use in the course. This is included. You get complete access to qualified users. And when you buy it, we look, are you a paid subscriber? Not one. We want to give you 2-week access to everything that I do. It's that simple. And away you go from there. All right? Now you see it in real time in the morning as I'm recording and talking and showing it to you what's happening. And I do point it out. And then we look at it the other way. Does everything work all the time? Nothing works all the time but death and taxes. You can believe whatever you want. That's just not the reality of anything else that I know of. So you put this together, you get another tool. That part I do believe. You go to IraEpstein.com, take a look at courses. You'll see the different courses I have there, or move your cursor to the top. There'll be an icon, give it a click. With that, I'm Ira Epstein. You have a great day. I'll catch up with you first thing in the morning tomorrow. Take care.